there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
Wall Street's favorite bull, Tom Lee, is back with another bold prediction. And this one could define how 2025 ends for investors. In his latest CNBC interview, the Fundstrat head of research delivered a message that caught every investor's attention. Despite the noise, from private credit fears and market volatility to global trade risks, the stock market still has massive tailwinds from AI innovation, Fed easing, and rising earnings power. Lee believes these forces could drive the S&P 500 towards 7,200 by year-end, powered by a massive rotation into undervalued sectors and high-quality growth stocks. And here's the kicker. Institutional investors are badly lagging, with only about 22% beating the benchmark this year. Sentiment has flipped bearish, liquidity is building, and the setup for a year-end performance chase couldn't be stronger. The Fed is pivoting toward rate cuts, inflation has cooled, and corporate earnings aren't just stable, they're surprising to the upside. That, Lee says, creates the perfect setup for investors who look beyond fear and follow where real money is flowing next. So today, we're breaking down 4 companies that fit squarely within Tom Lee's bullish roadmap, stocks that aren't just riding the macro tailwinds, but creating them. From AI, infrastructure, and intelligence platforms to digital banking and electric mobility, these names are building the foundation of the next market cycle. Let's start with the engine that powers the AI revolution itself. NVIDIA, the AI engine the world can't run without. When the world shifts into the AI fast lane, NVIDIA is the company you simply can't replace. It's the oxygen of the AI economy, providing the compute power behind everything from data centers and generative AI to robotics and autonomous systems. In its latest Q2 of fiscal 2026, ending July 27, 2025, NVIDIA reported revenue of $46.7 billion, up about 56% year over year and 6% sequentially, a staggering result for a company already operating at massive scale. The data center segment alone pulled in $41.1 billion, growing 56% year over year, driven by skyrocketing demand for its Blackwell and Hopper architectures. Adjusted EPS came in at $1.04, beating analyst expectations of around $1.01. What truly stands out is the momentum of Blackwell, the next-generation AI chip platform that grew data center revenue by about 17% sequentially. This isn't just chip sales. It's the foundation of the AI supercycle. Cloud providers, enterprises, and even governments are racing to secure compute power, and NVIDIA sits at the heart of that gold rush. But it's not all smooth sailing. China access remains uncertain, and growth from this very high base will be harder to sustain. Maintaining 50% plus growth rates indefinitely is unlikely. Yet, in a market rotating toward AI infrastructure and profitable growth, NVIDIA remains the core conviction hold. It's not just a chip maker anymore, it's the platform provider for the new digital economy. Palantir, PLTR, the intelligence layer of the AI economy. If NVIDIA builds the AI hardware, Palantir builds the brain that runs on top of it. Once viewed as a government analytics company, Palantir has now evolved into the operating system for enterprise AI, bridging data analytics, and real-time decision-making like no one else. Its Q2 2025 earnings marked a turning point. Palantir's revenue surged 48% year over year, crossing the $1 billion mark for the first time in company history. U.S. revenue jumped 68% year over year to about $733 million, while commercial U.S. revenue exploded by 93%, clear proof that adoption of its artificial intelligence platform, AIP, is accelerating fast. GAAP EPS landed around 13 cents, with a healthy 27% operating margin, and management raised full-year guidance to target 45% overall revenue growth and 85% growth in U.S. commercial operations. What makes this story so powerful is transformation. Palantir is expanding beyond defense into every industry that needs AI to make decisions: healthcare, manufacturing, energy, and finance. This is the rare company where the story, size, and growth are perfectly aligned. In your video tone, this is the shotgun blast. After the echo, Palantir isn't just selling software anymore. It's becoming the brain of enterprise AI. Risks do exist, valuation is stretched, and growth could cool if large contracts slow or if execution falters. But if the rotation continues into quality growth and AI-driven profitability, Palantir stands as one of the biggest beneficiaries. SoFi, the fintech breaking out of the startup phase. From AI to finance, SoFi is quietly rewriting the fintech playbook. What started as a student loan platform has evolved into a fully scaled, profitable digital bank, offering everything from checking and credit to investing and financial tech infrastructure. In Q2 2025, SoFi reported GAAP net revenue of $854.9 million, up 43% year over year, and adjusted net revenue of about $858.2 million, also up 44%. Net income came in at $97.3 million, or 8 cents per share, while adjusted EBITDA hit $249 million, soaring 81% year over year with a 29% margin. The company added roughly 850,000 new members during the quarter, bringing total membership to 11.7 million, and products grew to 17.1 million, both up 34% year over year. The message is clear. SoFi is no longer a high-growth startup burning cash. It's becoming a profitable fintech platform with meaningful scale. Its combination of innovation, efficiency, and profitability aligns perfectly with Tom Lee's rotation into quality growth thesis, where capital chases companies that are growing fast, earning real profits, and building long-term moats. In your delivery, here's the fintech that's not just growing, it's finally making money, scaling like a tech company, and stealing market share from legacy banks. Risks to note: rising competition, regulatory uncertainty, and potential margin pressure if credit trends shift. But with strong execution and accelerating adoption, SoFi's story is entering its prime. Tesla, TSLA, the high-risk, high-reward disruptor at a turning point. And finally, Tesla, the wild card of this list. It's no secret that Tesla has been under pressure this year. Revenue fell, deliveries slowed, and margins compressed as global EV competition intensified. But beneath those headwinds lies a powerful narrative of reinvention. In Q2 2025, Tesla posted $22.5 billion in revenue, down 12% year over year. GAAP net income was $1.17 billion, with EPS around 40 cents, meeting expectations. Deliveries came in at about 384,000 vehicles, with production over 410,000. On the surface, it looks like a slowdown, but the strategy is shifting. Tesla is doubling down on next-gen vehicle platforms, expanding its energy and storage business, and pushing hard on autonomy and FSD licensing, areas with far higher margin potential than cars alone. If the Fed's rate cuts spark consumer demand and risk appetite returns, Tesla could be one of the fastest rebounding large caps in the market. As you'd frame it in your video, this isn't the Tesla of endless growth, this is the Tesla of rebirth. And if the macro storm turns into a tailwind, it could fly again. Yes, risks remain, from fierce EV competition to margin compression and execution uncertainty, but that's what makes Tesla the high volatility, high reward piece of this portfolio rotation puzzle. Tom Lee's 7,200 call isn't just about optimism, it's about positioning. The market is shifting from fear to opportunity, from defense to offense. NVIDIA powers the AI revolution. Palantir makes sense of the intelligence it creates. SoFi transforms how people manage money in the digital age. And Tesla? It's the wild card, volatile, unpredictable, but still one of the best asymmetric bets on innovation. If Lee is right, and history shows he often is during key inflection points, then this could be the start of a performance-chasing rally into year-end that rewards investors bold enough to look forward while everyone else looks back.